All right. Good evening, everybody. Good evening. Good evening. Hope you guys are all doing well. I'm going to give it just a minute to let some more people in, and we'll get the ball rolling. This week, guys, we're going to be going over back testing and journaling. Again, I'm going to give it a few more minutes to let some other people join, and we will get right into it. Let me start recording on OBS 2 just in case. Good afternoon, good evening, everybody. Welcome to week 7 of our Futures Masterclass. I'm your host, Kevin Dubrisky. Now, week 7, guys, we're going to be going over backtesting and journaling. The best part about backtesting and journaling is that it helps refine your system and helps you stay active in the market while the market conditions are constantly changing. This is going to be a really great week. I'm super excited about it. I hope you guys are too. So let's get it started. So, the importance of journaling. A comprehensive trading journal helps track performance and refine strategies. It reveals emotional patterns and common mistakes, allowing for self improvement, right? So, if you consistently see that you're always getting stopped out on the 1 minute, you see that you should be taking your executions on the 5 minute or higher, whatever the case may be, when you're journaling, you're able to then reflect on what you're doing and what's going on in the market. Long-term success in trading stems from learning from past trades and making informed adjustments. As you guys see in my pre-market preps, I'm always going over how was that previous day's price action? Was gold breaking all-time highs and continuing higher? Have we been pushing higher or lower? Have we been range bound? Whatever the price action has been, that's what I look for us to continue, and I'll adjust my trading to that current market condition. Key performance metrics to keep an eye on, guys. As traders, we want to understand win rate, expectancy, and risk to reward ratio is essential for sustaining a profitability. So, guys, some people have 1-to-1 risk to reward, 2-to-1 risk to reward. I know you guys usually watch my trades. I like 4-to-1, maybe even a 3-to-1. These keep us profitable even if we take more losses than wins, if that happens to be the case. Drawdowns and recovery times provide insight into a strategy's resilience, right? That's the longevity. Is my strategy going to work long term in the market? Or is my strategy going to hit some type of roadblock once the bears step in, right? Is my strategy only strong in the bull market? Is it good in range bound market? Or is it a strategy that I can look to shift with different market conditions? Consistent, Consistently reviewing performance metrics leads to smarter trading decisions, right? And this helps us in the long run say, okay, well, I know I have better results in my trading when A, B, and C occur versus when 1, 2, and 3 occur. So how to track performance metrics, guys, this is very important, and I don't want you guys to get too scared because when we utilize spreadsheets to track performance, I know a lot of people hear spreadsheets and worry and get concerned. It's very boring. We got to type all this out. But have no fear. I put together an awesome spreadsheet. It is a Google Doc slash Microsoft Doc for you guys that you guys could use as your trading journal. And we're going to go over that in a few slides. So utilizing spreadsheets, Google Docs, or trading software to systematically log your trades, something we can do to further improve, right? So a trading software we could use for back testing and for journaling would be something like TradeZilla. So identify performance trends and make data-driven adjustments, right? So again, if I see that the market has been bullish for the past 3 weeks, but all of a sudden the past few days the market's been pulling back, I'm able to make that readjustment to my system because now market conditions seem to be shifting. Diligently tracking each trade helps refine and optimize your strategy over time, right? The more data and the more forward testing we do with the same strategy, the better results we get from it and the better off we are in the sense that we're able to refine that strategy so it works across multiple markets. Evaluating win rate and expectancy. So a high win rate alone does not guarantee profitability. I'm going to show you guys a risk to reward table in just a moment, and that'll tell you exactly what your win rate needs to be and what your risk to reward needs to be in order to be profitable. So focus on the relationship between win percentage, average win, loss percentage, and average loss, right? So as traders, we always want our average winner to outweigh our average loser. That way it keeps us in the trades much longer. We're letting our winners run, that's called. A strategy with strong expectancy outperforms a high win rate with poor risk to reward ratios. So if I have, and we'll bring it to the next table now, you could have a 3-to-1 risk to reward and be profitable by only being right 30% of the time, guys. That would be taking 3 out of 10 correct trades and still staying profitable. When it comes to a 4-to-1 risk to reward, if you were right 20% of the time, you would at least be break even. Imagine that, guys. Only taking 2 correct trades out of 10 and still being break even on the account. That's where risk to reward really comes in play, whether you're sizing into a trade and then you add to the trade because it's a winner, or you start a trade very lightly because you're a little uncertain on it and it stops you out for a smaller loss. It's another way we're able to manage our wins and losses. So refining your strategy. We want to pinpoint weaknesses and systematically improve strategy components. If you're using, say, the opening range breakout, that's the first 15-minute or 30-minute candle of the trading day. If you've been taking it for the breakouts or the breakdowns and you've noticed that more often than not, we've been getting a double break, well, then how are you going to refine that? Well, maybe instead of taking that first break out to the upside, you're going to take the break back into the range and target the break down to the downside after that initial break. But again, it's all about refining depending on market conditions. So we want to adjust elements such as entries, stop losses, targets, and risk management. This will help keep us on our toes and active. And we want continuous refinement is essential for achieving consistent profitability, right? No one strategy, one system is going to work the same exact way in every single market. But that's why when it comes to our strategies and our systems, we want to be refining them so that they do fit across different markets, right? If I trade supply and demand and I notice that demand zones are failing lately because we're in a bearish market, then I'm refining my system to take that demand zone as a supply zone and looking to short it off the retest after we break it. So a case study for strategy optimization, right? Backtesting can uncover inefficiencies and reveal areas of improvement. Yeah, now let's say, and the trade we're going to go over soon is a gold trade. I'm going to go over my trading journal that I created for you guys, and I'm going to show you guys an example using that trading journal on a gold trade that I took just this past, I think it was this past Monday, so like a week ago by now. But it was a pretty good trade on gold. However, I cut my winner too short. I was only in one contract. So there were a few things that I was able to adjust, right? I could then trade multiple contracts. So I could trade at least 2 contracts. So I could take off the one contract at my first take profit and maybe leave a runner or whatever the case may be. Now, small data-driven adjustments can signify enhanced overall performance. I'm sorry, can significantly enhance overall performance. Data-driven, sort of such as like when we're looking for the orb. Now, you don't need a tool like Edgeful that tells you the actual statistics, but if you're looking at just history in the market, have we been breaking resistance levels and making higher highs? Have we been having double breaks on the orb for the past few days that we should look for that to continue? Or even have we been only having breakouts on the orb? And I keep referencing the orb. You could also even use the gap fill strategy. A lot of people like to trade the gap fill to target the gap fill price as well. And some markets are great for trading the gap fill. Other markets, horrible. Now, I'm not saying different markets like the ES versus gold. I mean, the ES on month one might be great for a gap fill, and it might fill the gap almost 90% of the time. And month two, it might barely fill the gap maybe 40, 50% of the time. This is just an example of how the market conditions are always shifting. Now, when that month one is going on, and we see we're getting a gap fill day one, day two, day three, maybe we missed day four, but we're back on at day five, we could see that consistency is happening recently, and we could then use that data and use that data driven information to say, okay, I know the gap fill's been working. This strategy is working well lately. Let me use it. Same with fair value gaps, same with previous day high and low. All these different strategies, even moving averages, guys, every strategy that is in the market has market conditions where it is the best strategy. It's the golden nugget, golden egg strategy, and then it's not. What happens when it's not? Well, the strategy doesn't just stop working, it's a different market condition. So you just have to adjust that strategy. Now, when new traders find a strategy that's working really well in the market, and then all of a sudden it stops working, what happens is they get very upset, they get very disappointed, and they end up dropping that strategy completely. And I really want to beg you guys not to ever drop a strategy completely, especially if you've had success with it. Even if you only had success with it for a month, that means you were able to properly trade it. And I want you to remember that and just start building around it. Excuse me, it's all about building around one strategy so we can build a system, right? Our system isn't one strategy, but a strategy is part of our system. The most successful strategies are those that evolve over time, shifting with the market, right? Different market conditions call for different strategies. Now, common pitfalls in backtesting, guys, we want to avoid cherry picking favorable markets, test strategies under diverse market conditions. So if you're trading strategy gap fill and you see that it works really well in bull markets, but once you start backtesting it on a bear market, it doesn't really work too well. Okay, well, if that's and you want to stop backtesting bear markets because you don't like those results, you don't do that. Look for something else that might work in those bear markets, or look for that strategy and how you could use that in those bear markets or bull markets, whichever the case is, guys. These are all examples. This session is all about journaling, backtesting, and refining your strategy and system. Now, the other 6 sessions, this is already week 7. That's amazing. So excited. Love how this is all being put together. Um, we've gone over strategies, we've gone over confirmations, systems, entry criteria. So this is all putting it together with backtesting and journaling. So another thing is be realistic about potential outcomes and account for different market scenarios. So remember when there's going to be news, CPI, PPI, even FOMC, whatever the case may be realistic and be prepared. Over optimization, guys, can lead to strategies that perform poorly in live trading. Now, what do I mean by over optimization? Well, if you sort of overkill a strategy where I need the gap fill to occur between 9:30 and 10 o'clock, and this and this and this, and it has to be above previous day high, and it has to this, you're sort of over optimizing it to the point that it becomes unrealistic and very, very rarely occurs in the market. We're looking for things we're able to repeat. We want repeatability. Repeatability is the king when it comes to the market. So review and refining your process. We want to regularly assess your journal to identify recurring patterns. Now, it doesn't always have to be bad, guys. I know I'm going over recurring patterns like stopping out too soon or entering too late, right? Like you're chasing a trade like FOMO. But another recurring pattern could be a good entry, right? Let's say you've been taking really great trades on the ES. Your entries have been near a previous day high or some type of 15-minute supply zone, whatever the case may be, then look for those patterns to continue. And when the pattern stops continuing, then we're having a shift in market structure and we're able to find the next trend. Trend not range. Trend not range. Trend not being bull or bear, but trend being what strategy is working. Think of it when the market shifts in market structure, it's shifting in what strategy works the best. So think of it like groups of moving average traders over here, fair value gap traders over there, supply and demand traders over here. They all work well in different market conditions, but sometimes the market is always shifting. So because of that, traders who trade something like supply and demand or some type of balances, imbalances, they're able to then adjust, or even moving averages, they're able to adjust to different market conditions. Look for areas where small tweaks could lead to better performance. Guys, even if it's about moving your stop loss a few ticks or waiting an extra 5 minutes before your entry if you feel you're entering too soon, these little tweaks can end up making you a profitable trader. As crazy as that sounds, all it takes is one little tweak in the right direction, along with consistent journaling and consistently following your system and strategy to find that consistency in the market. Consistency, the word consistency is thrown around so frequently, and we have to remember that consistency is all over the place. Consistency with the strategy we use, with how we read our charts, with the tools we use, everything. Adapt your approach based on real data, not assumptions. We can never assume where the market's going. We can never think that, oh, I know the market's definitely going here. No, we want to react. I always preach it. We react, we don't assume. So, key takeaways, guys: tracking performance allows for continuous growth and refinement. Myself, now, sometimes I'll be honest, I don't always journal every single trade, and that's because I am a bit pretty busy taking care with you people, taking care of maybe a stream or whatever the case may be. But when I do my journals, when I do my pre-market preps, those also work as some form of journaling because let's say, and we'll show you guys an example, my let's say I do this little gold run up right here, and I end up taking this trade and this trade loses, well, then I'm able to take a screenshot of it and I'm able to say, okay, well, gold has been making all-time highs every day since January 31st. I'd like to see buyers continue, and I would only be comfortable taking the long positions, but I really need some confirmation that we're holding support. And if I took this trade and it ends up failing on me, then I would be able to journal and say, okay, well, where did I go wrong here? Well, I said it was making all-time highs. That's fine. Nothing's wrong with that. That's just acknowledging how gold is trading. I'd like to see buyers continue, but I would only be comfortable taking long positions. So maybe that's where I went wrong, right? I was only comfortable with longs, even though we had a very strong move to the downside pre-market already. But I really need some confirmation. So this part right here, but I really need some confirmation that we're holding support. That is so important. This would have been what either kept me out of the long trade or got me into a short trade. Because if I really need confirmation that we're holding support, that means only one of two things could happen in the market. We're either going to hold support and make our way back higher and these longs are going to work, or we're going to fail this support level and find our next support level, which is all the way down here now. So if we were to fail this, and I know that price failed support over here, I could look for this next target to the downside instead of trying to force a long trade. What else did I have? I had Fridays are tied for the strongest days during NYSE session, while it's also second weakest as well. So with that note, I should have been a little more careful on possibly taking a short position. Again, just an example, guys, right? We always want to be able to see some type of live example to go off of what we're talking about, we're going over. Being objective about strengths and weaknesses improve long-term success, guys. Don't be like, oh, well, I wasn't wrong because, don't have an ego in trading. Never have an ego in trading. We have to let the market keep us humble. We're humble traders. The goal is steady improvement, not perfection. You'll never be perfect. We'll never have 100% win accuracy. Okay, we might. There could be a chance where you could hit a win streak. Absolutely. I know I've had sometimes my best months, I'll go like a full month where I only had like 2 or 3 red days, and that's great. That's because I'm sticking to my system. I have a strategy. I have my pre-market preps, and that's part of my system. Excuse me. I sneeze. You ever have that where a sneeze is creeping up on you? All right, maybe it'll go away. Excuse me. Bless me. Thank you. Sorry. Anyways, practical next steps. Backtest your strategy with at least 20 trades and document key observations. I know, guys, 20 trades. If you want, start with 5. Go to 10. You don't have to go right to 20. The reason I say 20 is because that gives you enough information to say if that's a good strategy that you want to stick with or not. Identify what's working and where improvements are needed, right? So again, if I'm finding that my best trades are when gold and crude are trending, previous day highs are broken, we're getting that trend into the New York Open, well then I know that that is what's working and I can improve on what's working, right? I can maybe look to size up on what I know is working consistently for me, and then I can size down on the others and work on the others. Be prepared to refine your approach based on findings, right? So we're not just looking to see what's wrong, we're looking to make a change. As human nature, animal nature, it's custom and it's comfortable to follow routine. But the only way to be successful in trading is to break out of that boring routine and go a little out of your comfort zone. Pre-market preps, what I do every morning, 30, 40 minutes before market opens of just straight up analysis on the market every single morning. I know a lot of people viewing this might not be doing that right now. Even if you take just 15 minutes and you want to only trade ES that day, take those 15 minutes, do a little analysis pre-market, but do it consistently. If you're going to do your pre-market preps and trade, do it every day. Don't do it now and then, and don't journal now and then either. You have to journal every single trade. So create your journal. This is part 1 of 3. We're going to go over 3 different sections. Start with trade information such as the trade date and time, the trade symbol, entry price, exit price, trade direction, trade duration, and position size and win or loss. Now this is sort of just the basic, right? Doesn't say much. Now we want to break it down. Then we want to look at risk management. What's the reason for entering the trade? Have we been trending on the Nasdaq, or are we range bound and you're looking to fade a high? What that means is when you fade a stock or fade a futures, you're shorting it. You fade it, you short it. Trading strategy or setup used. Was it a fair value gap entry? Was it a liquidity sweep entry? Supply and demand, support and resistance, Fibonacci. What was the strategy or setup that you used? Actual profit or loss realized, and then percent gain or loss, guys. This is a bit more for if you're trading options or if you are trading a funded account versus like an evaluation or prop firm account. We really don't look at percent gain or loss when it comes to futures. And your analysis and trade outcome, right? So where was your stop loss level? Where was your target price? What was your risk to reward ratio? And what were any adjustments made to your stop loss or profit target? Now, here's the best part. This is where we trade, where we review our trade and lessons we learned, right? So review of the trade success or failure, and analysis of what went well and what could be improved, right? Ideas for future adjustments or modifications to your strategy. So if my strategy with supply and demand and I use it with fair value gaps and I notice that the fair value gaps break a lot lately, but the supply or demand zone hold, well, then I might be a bit more keen on adjusting my strategy to enter in my supply and demand versus entering in that fair value gap. Now, here's an example. We're going to go over, this is the gold trade I took. This was taken on, I believe it was, I want to say it was on the 12th, 212. And it was a long position. Entry was right here, 29.08, stop loss 29.05, and take profit was about 29.16. Original take profit, however, was around here, around 29.21. So I did end up exiting this trade a little too early. So trade date and time, this was on 212. This was at 9:05. My entry was at 9:05. This is the 9:05 candle right here, and it was a 5-minute candle. The trade symbol was GC gold. The entry price was 29.0830. Exit was 29.16. And then the trade direction was long. My trade duration was 10 minutes. And my position size was just 1 contract. Now you'll see here I did change out that percent gain. I changed it to win or loss. Oh no, is that the same? No, it is still win or loss. So win or loss, this was a win, right? This was a positive trade. This was a winning trade. What was my risk management? Well, my stop loss level was 29.0560. That was right below these recent pivots because I was looking for this 5-minute fair value gap to hold us higher here, and that's exactly what it started to do. Whereas if it didn't hold us higher, it would end up failing and my analysis would be incorrect. And whenever we have our analysis is incorrect, that's where our stop loss should be. So stop loss level 29.0560. Target price was 29.2080. So again, this top level right here was my target price. But what happened? Well, I moved my TP to 29.16 because this was a recent internal pivot. Now, I obviously could have held and caught another almost 4 points on gold, which is huge, guys. That's $400 per contract. The original risk to reward on this was a 4.5 to 1. I ended up taking, I think it was a 2.5 to 1. Now my trade analysis and outcome on this trade, the reason for entering the trade. Okay, well, gold was bullish. Trading strategy or setup used, well, it swept a higher time frame demand. That would be this blue area was a blue area of interest, a higher time frame AOI area of interest. So once we started holding that, I saw we had a very strong market structure shift right here, but I also saw we created a 5-minute fair value gap right here, which ended up being my entry, especially because we just broke a bearish fair value gap right there. So it was almost like it was an inverse and a regular. So that was also giving me a double confirmation on this trade. The actual profit or loss realized was $770, and percentage gain or loss, I put a little X in there because again, we're not looking at percentage when we're trading futures. So trade review and lessons learned, guys, this will be your best friend. This is the part that I really want you to be going over like every few days, right? So if I do this trade review on Monday, I want to review this trade review on Tuesday and Wednesday. Then when I take a trade on Tuesday, I'll want to review that trade on Wednesday and Thursday. What that does is it keeps me on my toes and it keeps me with the knowledge of how the market has been trading so I can look to ride that trend. So review of the trade success or failure. This was a great trend trade. Gold has been making all-time highs. Analysis of what went well and what could be improved. I should have entered with an additional contract so I can exit one at take profit 1, which would be 29.16, and a second contract to break even. So that way, if I was uncomfortable holding this last contract, what I could do is I could take the first one off and move my stop loss to break even. That way, this is a no-lose trade, and I could either have the winner continue and let my winner run, or it comes back, and again, it's a no loss, and I ended up taking profit. So when you take profit, you're locking that in. Ideas for future adjustment or modifications to my strategy. Well, I'll be sure to trade with at least 2 contracts so I can leave a runner. This is very important. This is how I'm going to refine and do better the next time this trade or this type of setup comes around. So here's the homework for tonight. I know it's a little soon on that, so let's get into some back testing techniques we could use on TradingView. So right now, guys, for TradingView, I do believe, let's check out which plan you need for access to backtesting. Let's see. Bar replay. So you just need the regular essential plan. You don't need the plus or the premium. You do at least need the essential, which is above the free version. But when you do have that, you're able to get the replay system. When you have the replay system, if you have 2 charts up like this, you're able to set it to, instead of single chart, all charts. And when you play it out, I want you guys to look. This is the 1-minute time frame on the left-hand side and the 5-minute time frame on the right-hand side. Watch how the 1-minute forms the candles, and then look at how the 5-minute takes a little more time to form each candle. It's moving a little fast. We'll slow it down a little as well. Come back to our replay. So this is where that 5-minute fair value gap was made. So I wasn't in any trades yet. I was still doing my pre-market prep. This is between, let's see, so 8:30. This is where I start my pre-market prep. So I've been doing prep this whole time, looking at gold, looking at oil, looking at NASDAQ. Now we're looking at the 5-minute right here. We just got a strong break to the upside. We're going to let that next 5-minute candle play out. So right off the bat, it's chopping, it's pulling back, but it's trying to hold. And we sort of see that here on the 1-minute, right? We see that we're sort of we created this bull flag. Now my entry was as soon as we broke back higher here, right? So I didn't get my entry inside the fair value gap because we wicked it and continued higher without giving me that second entry. So usually I'll look for us to push above it and then retest it one more time. Excuse me. But because of the current 5-minute market structure and the 15-minute was also bullish, I want to show you guys something. The 15-minute time frame, we had our basing candle. I'll show you right here. We had our basing candle with our long lower wick. We had our impulse move and then continuation. So I was looking for gold to continue higher for a little while. So that's why also when it comes to journaling this trade, I definitely could have really held that trade a little longer. Put our drawings back on. Again, this is the trade I ended up taking for a little 3-to-1 risk to reward. Original setup was a 4.8-to-1. So 3-to-1 is great too, But if we could get a little closer to 5-1, obviously that would be a little more ideal. So we could play it out again with the replay system move. And what's great with letting the replay system move on the 1 minute and the 5 minute is it shows how the 5 minute moves while the 5 minute is opened. Versus if we were just looking at the 5 minute chart right now, let's see. If we were just looking at the 5, it would move a lot differently. I'll show you guys that right now. It moves like just 2 times. It'll print, and then it'll print. You see that? So it doesn't give you that smoothness that it was giving us when we had 2 charts up. And that's a little bit of a trick that I like to use when it comes to TradingView and backtesting on TradingView. Now another trade I ended up taking, I think I ended up taking another one here. See if we can pull it up real quick. Yes, I ended up taking another trade on gold. Now this one I didn't journal, but we could do this one as an example journal, right? So we're going to play this out. Sort of let it play it out for a sec. We'll increase the speed on it as well. And I'll let you guys know when and where my next entry is. It looks like, what was my next entry? A 15 minute? Yeah, my next entry was a 15-minute fair value gap. Let's see, I'll show you guys. Right here, this was the setup I was looking at. So this setup looks like it is, I had a blue zone. Now, obviously, unfortunately, the zones that I had are deleted because this was about a week or so ago. But I would like to try to at least find it for you guys so we could re-journal and go over that one more time too. So this is the 5-minute chart. The 15-minute right here. We go to the 5-minute. And my entry was on this wick, so it was in this range, and that's how I knew this was a 15-minute fair value gap, because when I look at the 15-minute chart, we had our 15-minute fair value gap, but we also had, if we look at the 5-minute, we sort of have this little low that was made right here, right? And doesn't this look odd? If we're looking at a chart, a stock chart, doesn't this look weird where this red candle has no lower wick at all? Does it have a lower wick? Nope, not one bit. So a lot of times that creates an imbalance. So what I would look for then is this is an internal liquidity sweep as well as that 5-minute or 15-minute fair value gap. So we were sort of lining up with a few things at that point, and that's what gave me that second entry into that trade. So now we could put our 5-minute chart here, and we could put our 15-minute is still up here on the right. My entry was here. Now I ended up exiting this trade fairly quickly, and the reason for that is because we ended up having Powell speak like right after. So we'll let it play out for a second. I got out on the next 5-minute candle. So right here, this is where I got out. Powell spoke, and I want to show you how gold sort of continued. Just sort of chopped around at that point. Really didn't give us good momentum. It would have stopped me out of this trade anyways. Whenever we get a big speaker like Powell or any other Fed, and we can always check that in our calendar, then we want to be careful. Here is our economy, the 12th. And look at this 8:30. Powell testimony, 10 o'clock. And what time is this? This is our 9:55, which means this is our 10 o'clock candle. So again, guys, Powell was speaking. I was aware of that. So I said, I'm not going to hold this trade anymore. So let's pull up our trading journal and let's see. Perfect. Guys, if you guys want, I'm going to send you guys some copies of this. This is a this is a Google Doc. And it's just written out just as is, right? Trade information. You guys can edit it however you want. I would definitely recommend even using it as is. Gives you about a month's worth of trades. But that, of course, would be one trade a day. But, you know, you guys could always, of course, copy and then paste it and create more pages. But I'll send you guys a copy of this. We will download. I'll download it as a Word file. And I'm gonna send you guys that in the message in the there we go, perfect. So you guys got that right in there. And if anybody does need a copy of it, please reach out. Discord, Facebook, Instagram, wherever. But this is a great trading journal. And I know, guys, a lot of people might be a little worried about journaling and a little concerned on the whole time factor of it because it can get a little time consuming. So if you can't do a full trade review like this, guys, at least take some screenshots and give yourself a few minutes to write a little, like, not a verbal review, but a written review on the trade. This trade worked, like, let's say gold right here, right? Let's say I didn't end up exiting right when Powell spoke, and I ended up stopping out of this trade, and it ends up continuing all day, and I'm kicking myself over it, right? Which we can never kick ourselves over a trade, especially when it's past tense, because we can never trade with hindsight. We can only trade with going forward. So if that was the case, and I didn't have time to write a whole journal over it like I have here, then I could do just a quick written review and write something like, or even use, as you guys know, I like to use the little voice thing. And you could say something like, I was in a long position on gold because gold's been breaking previous day highs. However, Jerome Powell was speaking at 10 o'clock Eastern, which a lot of times gives us a very strong move in the market. So a lot of times we should be out of our trades. Even if you give yourself a little simple review like that, the simplest of reviews, and then you write something like loss of, and let's say you always have a loss of 250, so loss of 250, right? And you journal just how much you made, the direction you were trading in, how much your risk was, how much your reward was. That will help get you in line too, because then you're staying informed with yourself with the current market conditions. All right, so let's see. So guys, homework wise, again, I want you guys to backtest your strategy over the 20 trades. Start with 5, go to 10, whatever the case may be, and make sure when you're journaling them correctly and that you're writing them in the right strategies, right? Now, when I say the right strategies, I'm sort of referring to, is it an orbs trade setup you took, or is it a supply and demand setup you took? Is it a gap fill setup you took? What trade setup did you really take? Because what that'll do is that'll help you see which setups work best for you. Now, what I noticed right away, guys, if we did stop out of this trade, the 15-minute fair value gap ended up holding very well. So if I really wanted to be a hindsight trader with this setup here, something we could look for is say, okay, well then the next time we exit this fair value gap on the 15, we'll see if we create another level of support, which we do. We create another 5-minute fair value gap right here. Okay, well now I know. Earlier, we did have a 5-minute fair value gap trade work. Now, of course, guys, fair value gaps very unoften. They don't work too often. However, they do work. Just like most strategies, if you throw it anywhere, it's not going to work. But if you have the right stuff lining up and the right probabilities in your favor, it has the chances of working. Now, I noticed, okay, it worked once today, the 5-minute fair value gap. I see we broke these recent highs over here. We're clearly trending bullish on gold. Well, let me see if this 5 wants to hold. And what happens? This 5 does end up holding. This 5 gave us a better entry, though, because not only did it hold once, held 2, 3 times. So this was a very strong area of support. We also have to see to the left, it's always good to drag it left to see how price did react at that point. But very strong level. This could have been another possible trade. Could have targeted a new high a day right there for a quick little trade. Even if we took this trade right here, guys, depending on where our stop loss was, if we wanted it at the bottom of the fair value gap, bottom of that candle, I usually like to go with the fair value gap itself. But that would have been a nice trade for new high a day. A little 4-to-1 risk to reward on that. And that's without letting it run, right? If we let it run, we see that the market had a very strong continuation there. Look at that for a while now. So we're going to be a little patient, see how that plays out. And we have a 2-hour right here. And guys, you could also back test your supply and demand zones. Let's say I have a 2-hour demand zone right here, but I'm curious as to how was price reacting and trading on the 15-minute while this 2-hour demand zone was forming, right? So I'm going to let it play out on the 15-minute here. And I see that the 15-minute looks like we sold off. But look at this, we held that area of support again. Just saying. And let it play out again. Okay, well now I see the 15-minute created a basing candle. This is our order block level. Great. So here's our order block in this 2-hour zone that we're forming. Okay, boom. Now we have our 2-hour candle close, and I see that this is our new 2-hour candle right here. This 4 o'clock candle is the open of this candle right here. So once we start breaking higher, I would look to see if we can find that continuation. So look at that. We dip in one more time and create a higher low. This is what we would look for on the 15-minute because we're looking at a 2-hour time frame, right? We're doing analysis on the 2-hour time frame, which means our entry should be on a 15-minute time frame. Now, if we break this 15 down to a 5-minute, we'll see that it's even broken down more, and we could look at a 5-minute fair value gap that ended up holding there. Now, this one did break by a wick, and this is when I say we have to be careful with these types of gaps because they're very small. They do tend to break more often than not. So trade with supply and demand, trade off of those recent pivots, right? And most importantly, trade off of that right time frame analysis. So something we could have noticed was we ended up coming down right here. Here's an order block right here. And we wicked right inside of that. So we have an order block here, we're pushing higher, a new order block here, pushing higher. We retested, created a higher low. We're now creating higher lows and small higher highs. We haven't broken this high yet on gold, but we see that the 2-hour time frame is now finally looking in our direction. We were able to trade it off of the 15, and that's sort of exactly what we have to be doing. When we trade the 15-minute time frame doing analysis on the 15-minute, the 30-minute, and the hourly, then we want to be entering on the 5. But this is a great way to back test, see how these zones hold and move. So now, because I was looking at a 2-hour time frame to continue, that's what I would look for. I'd look for more long positions in this 2-hour trend. Now, at this point, it's like 8 at night, so it does depend on when you're trading, if you're trading and all of that. But I don't know, we see that we keep holding. Double bottom right there at this fair value gap. We continue higher. Again, another higher low. And I'm going to show you guys exactly what I mean by higher low. Wrong tool. Let's see. There she is. Perfect. If you guys have any questions, please let me know. You know, whether you want to cover journaling, back testing, very important to be aware of all of these different market structures and concepts. So here's our higher highs. And if you guys want me to go back on any of the other slides, please let me know too. I'll go back so you guys can take some notes. This is what I mean by also these lower time frame higher highs too. Look at this. So higher highs, higher lows, and now also our 2-hour finally broke that recent pivot high right here. Perfect. Look at that. Beautiful. We let it play out again. See how market reacts. Another strong move. So at this point, we're really only looking for longs, and we knew that because of our time frame analysis. Time frame analysis, along with our journaling, along with our system and strategy at hand, is super, super important. I'm going to hit the slides one more time, guys, just in case anybody does have any last-minute questions. Do want to cover them real quick, real briefly. So again, guys, the importance of a journal is the make or break and the difference between consistency and guessing. Once we start journaling, we start seeing repeatability in our system, in our setups, and in our trading, that's when we're able to see some good results, right? If we're doing the same thing over and over and getting the same results, then we know it's time to change something up. If we're doing the same thing and we're getting positive results, we know to remain consistent with our strategy in these current market conditions. So understanding win rate, expectancy, and risk to reward, very important. Now, just because you have a high win rate doesn't mean you are profitable. Some people could have, as we see on this slide right here, you could have a 1-to-1 risk to reward, and you need to be right 60% of the time. So 6 out of 10 trades, you have to be right and you're profitable. Whereas a 2-to-1, as soon as you put it to a 2-to-1, you could be right 4 out of 10 times. That's under 50. That is less than a coin flip, right? That's huge. That's amazing. That's sort of where numbers factor into trading versus just the analysis of things, right? Understanding risk to reward and risk management. Let's see. So 4-to-1, same thing, 30%, right? That would be 2 out of 5 trades. That would be maybe 3 out of 10 trades. Pinpointing weakness and being able to systematically improve our strategy is what we want to look for, right? When we create our strategy in our system, we want it to be almost like a robot, right? When we think of ChatGPT and all of these AI softwares, they're robotic. They follow a system, they follow a code, and they're usually not wrong sometimes. But our trading has to be followed the same way. A system, a code. If you have a job and you answer to a boss, they're going to give you rules, responsibilities, a system, and a code to follow. Same deal here. When we're trading, we are our own bosses. We're in control of our own wages. We're in control of our own risk, our own reward, and our own schedule. So if that's the case and we're truly our own bosses, then it's up to you as a trader to take the accountability and responsibility to create your system as is. So case study, strategy optimization. Again, guys, we want to look for the data-driven adjustments we could make. We want to look for things we could improve on throughout the market, throughout every day, right? Every week, every day in the market, we want to find something we could improve on. Adapt your approach based on real data, not assumptions, assuming anything in the market. If you're going to assume something in the market, you might as well be gambling, right? We don't want to be gamblers when we're traders. We want to be taking the right accountability and the right steps in our trading. All right, guys, if you do have any last minute questions, please let me know. This episode was a little bit shorter because it wasn't so in depth on building a system and finding strategies and confirmations, but journaling and backtesting, and it really does help refine, guys. And when I say refine, I mean finding those little bits and pieces that work really well in our favor and the bits and pieces that don't, that we should really look to try to get rid of. Whether it's an emotion that we have in the market or we have some type of strategy that's not working, well, how can we either work on the strategy to adjust so it does work, or how can we find a new strategy so we're able to move on? Because we also don't want to stay stuck in the market where we're getting the same answers and the same repeatability that we're keep losing and losing and losing. We want to be able to adjust so we're winning, losing, winning, losing. Because once you get that 50-50 on your trades, then you're able to look at your risks to reward, you're able to refine your entries, refine your targets, and really start to prosper and find that accomplishment and accountability and consistency. So I want you guys to backtest your strategy over at least 20 trades, whether you backtest 20 trades or backtest 10 trades and forward test 10 trades, whatever the case may be, make sure it's the same strategy on each trade. Don't jump from the orb to the gap fill to the previous day high to the supply and demand. Make sure it's the same strategy on each trade. And if you do want to backtest different strategies, make sure that you're journaling them correctly. Have one journal for strategy A, one journal for strategy B, so you could keep them separate and see which one performs better. If you start keeping separate journals for separate trading strategies and systems, and you see that strategy or system B is outperforming C and A by leaps and bounds, well, then you're able to say, okay, I'm not going to stray from B. I'm going to stay on B and keep moving with it. This is working out best. I want to stay with it. But I do not advise you guys keep 3 separate trading journals. Try to keep it to one and try to stay on that one strategy. Use a strategy of supply and demand, but maybe use the orb in coordinates with it, right? So use the orb to find your supply and demand entries. Record all your trades, tracking key performance metrics and observations. Again, track your emotions during the trades, guys. A lot of people get an emotional attachment, whether it's the profits they're seeing in the market, whether it's just having the emotional attachment that they feel the need to take a trade. But I want you to also be prepared to share key takeaways and insights in the next session. Next session, I do want to see some reviews from you guys from the trades you take. I am working on a video that I'm going to be putting out, not to the Futures Trading Masterclass, but to just YouTube. And it's really just a basic how to connect Apex to Tradeovate and Tradeovate to TradingView. It is going to take me a little time. I got to do a lot of editing into that because they're not making it easy on me with Apex. I was trying to make a new account so I could record it, but they're not letting me do that. Anywho, your homework assignment for the night, guys. You guys have my contact. If anybody has any further questions, please leave a message in the chat if you do have any questions now. If not, don't forget you guys do have the trading journal right in the messages over here. So you guys can download that. When you click that, it actually opens Microsoft Word and it brings you to your Trading Pioneer trading journal. Gives you a little trading cheat sheet, resources, and then your lists of trade information, risk management, and different types of journaling. Guys, have a great night. Have a great weekend. I'll see you guys next week is the last week of our classes. And have a great day. Happy trading, and I'll see you guys soon. Take care. And I'll have the link sent to all of you shortly. All right, take care, everybody. Have a good night. Bye.